All right. Good morning, guys. Today is 11th of May, and as usual, we'll be going analysis for US 30, gold, and EU. So right now you can see for US 30, so for all these instruments, we are bearish. For US 30, we are bearish. For gold, we are, I think gold is kind of indecisive. You can see the consolidation. However, we do have a death cross that's coming in on the 5-minute. EU is definitely bearish as well. So this morning there were good reversal entries. So this was a reversal entry off of gold. So for this reversal entry, what you had here, actually it's the opposite. So this was here, and then you have this 150 pips above this is 2037.34. So in here, so with this setup, you're not interested in, you come in here, configure the reversal indicator to sells only because you're interested only in sells. Here is 50. This one is play around with close or, but right now on lower time frames, this should be close. And then you would have waited. So, right, you wouldn't have been interested. The purpose for this is that you wouldn't have been interested in any sell that would have shown up until price broke above your threshold and came back down. So this sell came before news, and then this candle wicked up and faked out, and then now gold is melting. So for these reversals previously, I did say try to use either double the TP we normally use. So 50 pips TP, 50 pips stop loss is our regular TP and stop loss on our regular trade. But for reversals, try and do double what we do. So here you could have either double or 1.5 times. So here you could have either done 100 pips TP, 100 pips stop loss, and you can see you. So always ask yourself, are you trading the reversal after news? If it's definitely after a period of volatility, use a wider TP and stop loss. So either 1.5, so you could have even done 750 or 750 pips TP, 750 pips stop loss. You see for that one, you could have been stopped out too. So it's for reversals, especially if it's during heavy news, and I went over this yesterday, try and use double what we normally use, and you'll be less susceptible to getting faked out. So if you would have used 100 pips TP, 100 pips stop loss, that could have been good. So the other EU reversal was this one. So this one was for buys. It should be 30 for FX pairs. Source here is close. Play around with close or fast MA. So this is what I was looking for. The reason why I was looking for a buy down here was because, and this trade for me hit break even, but it did go up in profit. Give me a quick second, guys. All right, give me a second, guys. I have to step away a little bit. All right, sorry guys, I'm also checking on something else, so I might be just in and out of trades. But you can see everything is bearish at this point. So just let things keep dropping. So US30, we are coming into demand zones. So always wait for, in any case here, a possible reversal at maybe 33,000. So let's wait for US30 to come down, possibly here. So I need US30 to stay below the 9 EMA and then possibly this. So I'm looking for a reversal for US30. Yeah, but just hold as of now.
A quick question.
Yeah, just give me 1 second. I'll be back in like a minute. Okay. Yeah, back. What's the question?
Yeah, I wanted to know why did you get out of the EU trade? Because
Because I don't like trading before New York Open, and I don't like holding trades into New York Open. So that's ideally it. So
okay.
yeah, I don't yeah, it's I like starting the day because I trade New York, so I don't want to start the day in drawdown. It's probably still in drawdown and hasn't hit stop loss, but yeah, I would rather wait for another one, for another entry. But so this trade I got out at, and personally for this trade, because it was before, I entered this trade way before, even before news actually. So I went for a 20 pip TP and 20 pip stop loss. So right here, so I entered this trade here. So this was way before news. And then when news spiked up, I almost hit TP. At this point, I just put the trade at break even.
Okay.
So that's the reason. So I didn't enter this trade during news. I was already in the trade when news happened, and news just spiked me all the way up. So that's the reason I went out. But if I was entering during news, I would have still been in and used a 50 pip TP, 50 pip stop loss. So the trade is still valid if you entered all the way here, depending on, so remember, it depends like what also news you have for the day, right? So if you don't have any news immediately when you're identifying the reversal, you can use our regular TP and stop loss. But if the trade like gold, so you can see gold is right there. Gold came up exactly like 5 minutes before news. The sell on gold. So this one, instead of using 50 pips TP, 50 pips stop loss, now this is a trade for the reversal. You could have used double. So you could have used 100 pips TP, 100 pips stop loss.
Usually on gold, it's for the reversal, it's 100 pip, no?
Yeah, usually. But sometimes, depending on how slow or how fast the market is. So if you're trading in Asia, are you really gonna want to hold for 100 pips? I mean, sure.
Okay.
Yeah. So right, and it also depends on preference. Personally, I always look at, am I trading a reversal during news? Am I trading a reversal during a slow session like Asia session? So you always want to see, but if you want to be safe and not care whether it's during news or whether it's during Asia, yes, always use double the lot size. I'm sorry, double the TP and stop loss. Yeah, if anybody has any other questions, feel free to go ahead and ask. I need to look at some other things. Yeah, but the market today is bearish. So today I'm just waiting for reversal. So I'm waiting for reversal on US 30 here. I'm waiting for this buy. So the reason, if I put it on our reversal, and oh, let me reiterate. So I was able to get a new merchant for the subscriptions. So I set up PayPal. So normally, I know you guys, I took off the subscription services access right here because previously I'd gotten dropped by, or Square just dropped because for some reason they don't take membership subscriptions or whatnot. So regularly the chart access is $99.99 a month, and with that you get access, daily access to US 30, gold, and EU, like exactly what I have on my chart. Not screenshots, you get exactly the trading view chart that I have on my chart. Indicators access, you get access to all the indicators that I will ever develop, current and future. The other one is signals access. You get access to signals on Discord and on Telegram. Then you have all these other bundles. So given that during this month, I'd say that I'll give everybody who subscribed access to, so this package right here, the $199.99 a month. So I'd give everybody indicators, signals, and charts access for like it was about $100. Yeah, $100 for this month. But given that it's already mid month, I just created this payment link. So for the rest of the month until May 31st, for just $50, you'll get access to indicators, signals, and charts. So just go ahead and click on that link if you're interested. Again, remember, you don't need to subscribe to make money with me. You know, I still do, the Zoom sessions will still remain free. But with that, at least you can see if you're new and you had it, because keep in mind that I'd given everybody who started with me free access for about 2 months to signals, to I hadn't started giving access to the charts, to signals and indicators. I'd given people free access for like 2 or so months as I was setting up the club. But right now, if you're still new, I think $50 for something that will be $200 a month going forward, it's worth it to see if it's for you. If it's not for you, I mean, we still have like 3 or so weeks remaining in the month. But yeah, so if you do use this, send me the confirmation in Discord, just DM me, and then send me your trading view username and Telegram username so that I can give you access to all these indicators. I'll give you access to the breakout scanner. I'll give you access to the reversal indicator that we're using. I'll give you access to the high, low plus trend indicator. I'll give you access to the semaphore indicator. And going forward, you always have access to even all other indicators that I'll ever develop. Now, if after this month you think indicators are not for you, there are packages for signals only. If you find that charts are not for you, there are other. So I'll reopen this channel later on in the month so that you guys can pick. But at least for $50 for like 3 weeks, I think it's worth it to decide, at least if you haven't gotten a chance to test it before. It's worth it so that at the end of the month you can decide if all three are good for you and you think they're worth it, well and good. If you only think indicators is what you need, well and good. There'll be packages for that. So I've put that in the Discord, and feel free to open. If you have any issues with the payment, let me know. But I think PayPal should be more stable than Square. So that's just one thing I wanted to bring up. So yeah, so for gold right here, for a reversal, I do see we are in a trend. So what I'm looking for on gold, I can automatically see a point of interest. Oh, I already have one. So what I'll do right now is take this somewhere above here. I like to play around with even numbers, just makes the math easier. So what I'm looking for here is trend. So 150 pips. So 2038 minus 15 is what? 2023. Okay. The other thing with this, I did say you don't want big candles like this taking like 50 or 70% of the move. So you have like these two huge 5-minute candles. So you can see the 150 pip move right here would be 2023, somewhere there. So somewhere there. So this is 150 pips. Um, 150 pips. Then come in here. Oh, I could have just used this one. Oh, good. Come in here. Yeah, I'm not interested in sell signals because I'm trying to catch a reversal. 50 breakout pips in here for gold. Close as a source. I might switch that to fast moving average based on what I see. But what I'm looking for here now, gold has already trended past my threshold. So now I'm looking for a buy on gold on the 5-minute to catch the reversal. The only red flag here is this huge candles. You don't want huge candles accounting for like 50 or 30% of the move. So you want a trend like this. So when this sell came, this sell made sense to me. So if I turn on the sell here, for example, if I go over this sell made sense because you can see this trend 2023, 150 pips was 2038. So you had a bunch of 5-minute candles that were mostly equidistant or same body size being part of the trend, right? And it was like 9:25 to about 2 hours or so. This one right here, 13, this is just 1 hour. This trend has only gone for 1 hour. So the red flag here for this reversal is this huge candles that are accounting for about 30 or 40% of the move of the volume. It is still a valid buy if it comes up, so I'll be waiting for that. Same thing for US 30 here. Let me see if I see anything for EU. Let me check something here. Take some of this charts. Okay. Just a second, I'm checking on some of my other accounts. Yeah, but for US 30, if I come in here for the reversal, I'll just do this. Come in here. I'm interested in buys. I can automatically see a trend on the 5-minute. So draw this as my area of interest somewhere around here, 470, just to make the math easier. And then a trend for me on US 30 is anything 500 pips. So what's 500 pips from here? 170. So this has already met this threshold right here. Perfect. So this is 500 pips. So now I just come in here. I'm only interested in buys. So I turn on the buy 50 right here, close, and then I just wait for my buy right there. EU, EU 355. So EU, same thing, might be able to catch a reversal on that as well. Euro USD. Yeah, so this is that trade would have gotten taken out at break even. So for EU, but that trade I think is still running. So same thing right here. Let's see. Looking for this point of interest. So I'll call this, you know what, I'll bring it up here. Okay, call this point of interest right there. And then pick this. So for EU, what I'm interested in, a trend of 50 pips. So I'll come in here for 11. That should be 911, I believe. So somewhere around here. So I'm not interested. And the other case, I don't want to see any closures above the 9 EMA for this particular one. So this is the threshold. So this is 50 pips right here. So I'm not interested in any buy that comes up within this zone. So since this is an FX pair, do 30 here and leave the rest. So yeah, so we are primed to catch reversals for all of these three instruments, and you can see US 30 is coming into a demand zone, or into a bunch of demand zones. Now for here, let's look at structure, right? Always remember this instruments like completing structure. So the further I go, where is US 30 likely to stop at? You can see the structure on the, oh, I'm sorry, this is the 5 minutes. Keep forgetting to send. And for you guys who have access to my charts, I did send you access this morning, and I think EU rejected, which one was it? EU or gold? Gold rejected during the news. Gold was in a deep, no, I think it was EU. Yeah, EU was another good buy because EU was in a demand zone before the news at 8:30, and then you had that quick spike up. So for those of you who have access to my chart, you should have seen a decent move right there. What was I analyzing? Okay, US 30. So I'm looking at structure here on the hourly. So price is around here. So the next point of support seems to be somewhere around here, which is 32,857 area, 32,916 area. So you can see that lines up with the current monthly low, or a little bit below that. So that's why I'm saying a reversal on US 30 would be good. So nothing much to look at even on the hourly. Right here, you also have this structure at 32,979, right? So if you look where I'm pointing the chart to my right, you have this structure. If this structure is to be completed, so US 30, you have this structure is to be completed around this area, 32,980. And guess what? That lines up 30 with this demand zone down here. So that's why a reversal would be sufficient for US 30. So I'll just leave this chart right here as is. This had drawn on the 5 minute. Gold, let me change. So gold, this is the hourly. You can see if gold is to complete structure, we have around 2007 area. So we need gold to keep dropping 2007 area, but you can see we are coming into a bearish high, bearish low area. I didn't see that. So US 30, we don't have any zones for now, but you can see it's breaking past demand zones where you would expect price to keep going up. So remember, I've mentioned this pattern in the past. They don't have to use the demand zones, and we also have an hourly bullish low here. They don't have to use these demand zones just as of yet. They might be using these demand zones to fake out the buyers before the actual move, right? So you have the manipulation because you have a lot of buyers here, or some buyers that are seated here, even in the hourly order block. So they might just be faking them out and stopping them out before coming to pick up liquidity at the completion of structure. And at that point, the smart buyers, which hopefully it's us, we are waiting for the nice reversal with minimal drawdown to catch the move back up. Now, this move back up, if and when it does come, remember, I said I like trading when, if I'm looking for buys, I like being in demand zones, and I like having bullish order blocks. So if you look around, what do we have? We have all these demand zones. We have an hourly bullish low. We have a 30-minute bullish low. We have a 15-minute bullish low, I believe. I think we might have a 4-hour. Yeah, 4-hour. I know this zone is a bit, if I hide this, it will take off everything. Try and zoom in. So we have a 4-hour bullish low, previous monthly low, 15-minute bullish low, hourly bullish low, 30-minute bullish low. We do not have any well, based on my markups, we don't have any bearish order blocks. So that is what I want to see, because when now they bring price up, it will be either a spike up to TP, or a gentle and steady move towards take profit. So I'm more interested in this US 30 buy. Gold, let's see what we have. Gold, we do have this 4-hour bearish high. As compared to US 30, we did not have any bearish zones around there. But for gold also, you see we also have a 4-hour bullish low up here, 30-minute bullish low. bullish high also, hourly, I believe hourly bullish high, 4-hour bullish high. So gold should also, other than this 4-hour bearish high, that's the only red flag on that. But for gold, we are also in demand zones. EU, we are also in demand zones. We have no markups around where price is at right now. But you can see if we do get that reversal, we really don't have anything that's should keep price down. So the goal here is to be patient and wait for those signals to come up. And once we do get them, hopefully we get them on the live session, we'll be able to take them. Let's see, not sure if we have anything else. Does anybody have any questions regarding anything that I've gone over?
Yeah, bro. That's fall. So
I'm sorry, could you come again?
why did price fall like that? From where it was, but when it made the move to the top, and then it just fell. Like, why did that happen?
Why did it break support?
No, why did price go up and then just fall like right now?
Where? What asset are you talking about?
For gold.
Why did price go up and then
Yeah,
go
you went.
down?
Yeah.
Where? From where? Here?
From 2040.
From 2040, so around here.
Hmm.
So look at where price, well, where was price at? Price was everything around there was red. So you have sellers. So you just had a bunch of sellers here. So there was nothing to push gold up here. So you had supply zones within supply zones. You had overall supply zones. So you had sellers here. There was nothing to push gold up.
All right. So that's the so red folder news, it would of course, like you said, it would wait for 5 minute candle, but then it's not like FOMC where there would be a continuation. Just like instead it just came back down.
Yeah.
So
Also remember, even trading news, it's not always going to go how it has always gone. So that's why you always want to ask yourself, what is the probability, right? So it doesn't have to play out like even FOMC doesn't always play this, the next FOMC doesn't have to follow what the last FOMC does. What you always want to have is make sure your setup is valid and make sure you know why you're entering the trade and see what's the probability, right? If I'm trading this pattern of news, how many times in the past has this pattern won? If it has won 10%, 1 out of 10 of the times, then that's not a valid pattern you should be risking. But if that pattern you're trading has won 8 out of 10 times, then go ahead and trade it. So this is why, like today for this gold trade, for the EU trade, I took it. It made sense to me. For this gold trade, I didn't take it, this reversal, because I was finishing some of the other markups I was doing. But this gold trade made sense primarily because of the reversal strategy. So that's why I would have been in this gold trade for the sell, because it would have made sense to me, because the reason I would have gotten into it is the trend. There was a 150 pip trend which matched my strategy, and I know my reversal strategy has like a 80% win rate. So just with that confirmation by itself, I would not care about news. I would instead, with the 50 pips, instead of going for this 50 pips that I drew up here, 50 pips TP, 50 pips stop loss, reversals, just to be safe, always use double what we use. So for this one, I would not have cared what in any case, right? A lot of people are afraid of news because they're afraid of getting burnt. So why not think of news as something that should take your trade to TP? So if I actually saw this trade on time, I would have entered, and then I would have asked myself, hey, there's news in 10 minutes, because I think this was the news candle, right? Yeah, this right here was the news candle. So I would have seen there's news in 10 minutes, but I'm like, this though matches my strategy and meets my strategy for the reversal. And I know my reversal strategy has like a 80% win rate. So at that point, I'm like, I know I have the confluence. This has 8 out of 10 times this strategy will win. If this is one of the 2 times when it doesn't, then that's life. That's what happens. But I would have been optimistic and said, you know what? News is normally supposed to take price where it's supposed to go. Remember, price does not just move just for the sake of it. it moves from one area of liquidity to another, whether it's on the 1 second time frame, right? Here I have access even to the 1 second candles, to the 15-second candles. So there's always order blocks, regardless of what of whatever time frame you're trading. So at that point, I'm like, you know what? I'll get into this sell. Whatever happens, happens, because it makes sense. So yeah, be cautious of news, yes, but find a strategy that works, find a strategy that has a high win rate, and then just be optimistic that news is just going to take your trade where it's supposed to go.
So from 2034, when we went to like 2040, so from there, from 2040, like you said, there was a reversal. So that only happened during like normal red folder news, not like during FOMC stuff like that.
Oh no, it will happen. It will happen even during So if you want to go back to days we've traded FOMC and whatnot, you'll see price always comes to my markups. So if we have, I think Livy, I don't know if Livy is in here. I know Livy, like yesterday, I had a markup for, what was that, EU, and we had CPI news, and price, was it yesterday? I don't know, maybe a few days ago. Price went all faked out all the way and went
It was
into a supply.
yesterday. I
Yeah.
think it was US 30.
Yeah, or US 30. So price went up exactly to where I had a supply zone within a supply zone and melted to the downside. So that's why I don't, right? Not to say I don't care about news, but nowadays I trust my strategy. Whether there's news or not, I just trust that news will take price to where my trade is supposed to be. That's all that counts. Because sometimes if you focus too much on news, you either over leverage or just get burnt. But think of news in a optimistic way. A lot of people just are afraid of trading news. You can make that. I can easily make just be taking one trade a month based off of news, and I'm done with that account. So just be optimistic about news. I was there too. Like I was always pessimistic. I was always afraid to trade news. Nowadays, I'm not afraid to trade news. So because I have like a 80% win rate based on what are the calculations that I've done for all my strategies. So why would I be afraid of trading news or being in a trade before or after news?
Yeah, but the thing is, when you trade the news, the thing is, on the 5 minutes when you said you would always wait and look for the demand zone. So if you look for the demand zone on the 5 minutes, and let's just say you're in a demand zone on the 5 minutes, and then the news candle comes. Like let's just say before news, like 5 minutes, and you're on the 5 minute chart and you're in the demand zone. Would you now hold that trade?
No, I would, yeah, I would still hold. And here's the other thing. Here's the other thing you should let me ask you, how many is there anybody who has 100% win rate in trading? Right? No. So whether you can be right, like for this trade, you could have been, for this gold reversal, you could have been right for this. This was a perfect sell. This was a valid sell. But if you went for 50 pips, yes, right, you could have gotten stopped out as opposed to the person who went for 100 pips. But this is where the now learning comes up, right? Because I did mention this yesterday. It's like, take this as a learning thing. You see that they faked you out because they knew there's some buyers, smart buyers up here, I'm sorry, smart sellers out here that see the drop coming. So they go ahead and stop all of them out before now reversing price back down. And you can see, right, where is even price rejecting from? It's rejecting exactly from our point of interest, right? So learn how to do markups or use my markups, because you can see my markups are almost always tested to the pip. So just by that, have trust in them, and then next time say, okay, last time I entered gold like 10 minutes before news on a valid buy or valid sell. And this is the importance of journaling. So journal the trades you take before news, or the trades that news catch you in, and see, okay, it went straight into TP. What was my TP? What was my stop loss? Okay, I won like 3 out of 5 of the trades that news caught me in. Okay, for these 2 trades that news took me out, was it a faker? Was the trade valid? Yes, the trade was valid. What was my TP and stop loss? My TP and stop loss for gold was, let's say 50-50. Like for example, this trade, if you are to journal, you entered and you got stopped out, my TP was 50-50. Okay, then you say next time, if I'm in a trade before news and the trade is valid and I'm trading the reversal, I'll use double the TP and double the stop loss. So that, remember, this, trades will always repeat themselves, so that next time we will, even right now, we're going to get this trade, and at least right now we are probably, it's not going to be during news. So next time, that if I'm trading a reversal and it's 30 or 15 minutes before heavy news for gold, and I see a valid sell for gold, guess what? This time, because I learned from last time, this time I'll use 100 pips TP and 100 pips stop loss. Now, yes, you can still get stopped out, but the likelihood, right? Trading is all a game of probability. The likelihood or the probability of you winning that trade will be higher, right? So this one, if you did 100 pips TP, 100 pips stop loss, would have, easily won that trade. As much as they would have almost stopped you out, you'd have survived this because you are smart enough and you remembered. So yeah. So for this one, still waiting on this trades. There's nothing really other than that, other than the reversal. Even sell zones, gold is the only instrument here that has a supply, yes, a supply zone or bearish order block at around 2012 and 2003. EU, we don't have any markups for EU as well. So EU can either keep trending because we don't have any items to support it other than the demand zone. So you should always ask yourself, if we don't have any markups around us, where is price likely to head, right? Remember, price moves from one area of liquidity to another. So if we are supposed to go to get a buy momentum to the upside, where are we likely to go? So you always look, where do we have this demand zone? So we have a small demand zone here, but we have a bigger demand zone below it, and we have a demand zone within a demand zone right there. Okay, below that, we just have a small demand zone. So EU, more than likely, it's more than likely going to break through this small demand zone, come into this larger demand zone, come into this demand zone within a demand zone, and right. So always ask yourself, where is price at? Where is price likely to go? And just draw your markups and then just wait for price to come with that. But yeah, so this is the only trade that I'm looking, the US 30 and what is it called? US 30 gold and EU. I am looking for reversals on that. So hopefully that comes during the live session. If not, it should be after. So yeah, today, this week has been slow. So remember, I told you guys during the summer, markets ideally die down. So this can be a chance for you guys to ask any questions you have as we wait for entries.
All right, so I noticed on one of the setups that you posted in the chat, and based on what you said, sorry, let me just confirm which one it is. I think it's the EU one. It had two candles that were like majority of the move. Obviously, you said that be wary of like certain moves that have like huge candles that make up like the majority of it. So I was just wondering what still made you see that as a viable opportunity. Okay,
good question. So if we take out this candle right here, oh, I'm sorry, that's gold. So you can, the best thing that can happen is for the trend to continue so that the big candles are just invalidated. So what you don't want, just 1 second, let me do something. So what you don't want to see, so let me go to EU. Was it EU or gold? I think it was mostly gold.
It was
EU,
gold.
yeah, it was gold. So you want to take away that. So if I take away this huge candle, 2025, which is the candle that's standing out to me pretty much, because all the others are mostly, so you don't want to have like one, and I mean, it will stand out just by looking at it. This one candle stands out to me as being maybe 20-30% of the move. So you want to take that candle out So this is 2025 to 2017. So I'll just call that a 100 pip candle. So that's a 100 pip candle actually. So then what you then want to do is take out the bottom of the range less 100 pips. So 2011 would be 2021. So 2021 would be here. 2021 would be around here. So if you subtract the big candles that are part of the trend, and then you just consider the remaining candles. So if I subtracted 100 pips from the bottom of this range, I would go to, this is 2011 35. So add 100 pips above or subtract whatever it is that makes sense. 2011, you'll go to 2021 40. So this 2021 40 should not be in here, should not be within this 150 pips, if that makes sense. So where's 2021 40? 2021 40 is right here. So 2021 40 is about the bottom of this range. It's about 10 pips away from the threshold. So that's how you go over that. If you have big candles, subtract the volume of the big candle or candles from the bottom of a move. So to me, this one candle is what stands out for me, because right here, price was so close to the 9 EMA. However, this one candle took price so far away from the 9 EMA. Does that make sense? So just look for a candle that stands out as a huge candle that's accounting for like 20% of the move. And then
Okay.
and then subtract that from the threshold.
I think it was EU as well. It had two like large candles, but yeah, I think that concept makes sense.
Okay. Let's see. Yeah, so EU, so we have this, the one that stands out to me is this one right here on the 5 minute. So that's 195. The bottom of it is, so that's a 10 pip candle. So 10 pips. So what we don't want here is for a buy signal to show up. So if a buy signal shows up, this reversal will be invalidated. As much as EU can reverse from here, the buy signal will be invalidated. So for this one, we are still.
It was the move before. It was the move before that you posted in the chat.
Oh, I'm sorry. Okay, this one.
Yeah, sorry, those two candles after the sell signal.
Okay, so for this one, for the buy coming in here, point of interest is here. A round number, I'll call it 800. Nah, I'll call it 810, 820. Point of interest. Okay. Well, I could have just dragged that on top. And then this was that for fast MA 30, and there, that's it. So for this one, 50 pips from here is 318. So 318 is somewhere around no, 320 minus 5 is 320. Okay, so this candle at 320 is somewhere around here. 320. Okay, perfect. So these two candles. Okay, so remember what I mentioned. You want to look at where is price at based on where you're trading or the session you're trading. So for this, you're right. These candles are huge candles. You are right about that. Now, if you, of course, took away, so this move from the top here to the bottom here before the buy signal came up was that's 212, that's 600, about 60 pips. Okay, so if you took out the volume of this candle, that's 690. Call this I'll just call it 10 pips and call this 461. Call that 50 pips. So I'm sorry, 10 pips and 5 pips. So if you subtracted 15 pips from 15 pips, that's 45 pips. So if you subtracted these two candles from this whole trend, the threshold would be 45 pips, which is 5 pips below your threshold. Now, here's the caveat for this. When did this buy come up? This came up. This buy came up. When did I enter? It was about 8 a.m. So let's see the time now. This is 14:25. This one would be 8:25. So 6 hours ago, about 5 a.m. 5 or 6 a.m. or whatever time that was. So this was mid-London season, or towards the mid-London season session. There was no news, there was no heavy news. There was also, it was 3 hours away from New York Open. So the reason I entered this, even taking out, subtracting this, you would have been borderline your threshold and wouldn't have aligned with that, what I just mentioned. Again, you always want to see, are you entering before news? Are you entering? So large candles, they should be good if, for example, Asia session. So for those of you guys who know, at about 9:30 p.m. Eastern Standard Time, pretty much every day, you normally have a spike in gold or in liquidity. So that's when it's about mid-Asian session. So if you are basing a trade based off of a 9:30 p.m. Eastern candle, normally on gold, you would have to subtract that one candle, which would probably account for like 30% of the move. However, you also need to look, is that candle, why did that candle happen? Was there news around that candle? If there was no news, if it's during a slow session like Asia or even during London, then that trade can be valid so long as it meets that threshold. The only time a trade like that won't be valid is if the example I just gave on gold earlier. So this gold trade right here, this sell on gold came up before news, so before this news at 8:30. So the which one was it? The PPI and unemployment claims. So that sell or that reversal sell for gold came before news. So now this right here, and that's why I'm saying this is a candle I can subtract. These candles are coming up in and around news or in and after news. So if you have big candles in a trend, ask yourself, do I have news coming up shortly? Did news just pass? And then that will tell you whether that's valid or not. So some of this logical issues like during news and whatnot, like I cannot code that in the indicator, but that's up to you to ask yourself, right? I'm trading this reversal. Is news about to happen? Okay, I see one candle that's accounting for 20% of the move, but it's during Asia session. There's no news that's around this candle. After this candle, right, the threshold was met. Do I still enter this reversal? To me, yes, you should enter if there's no news around it. Hopefully that makes sense. So always look at the session you're trading. Always look at if there's any news that's immediately after or before that that candle that you're considering. And mostly for gold, you see like how I subtracted 10, was that? Is it 10 pips? 10 pips from one candle. When gold starts a trend, if you subtract these huge candles, it won't really make much of a difference. You'll still get a valid entry. But for FX pairs, remember FX pairs do move slower than gold. So FX pairs, you can have a candle accounting for 20 or 30% of the move. And if you subtract that from your 50 pip threshold, you might just be out of a trade or you might miss out on a trade. And keep in mind, so here's the other thing. All this, so the point of interest, or leave alone the point of interest, these values that I'm putting here, 150 pip trend for gold, 50 pips trend for FX pairs, and 500 pip trend for US 30. 500 pip trend for US 30. Those are my own values. So that's just from my own back testing. So that has nothing to do, or that has nothing to do with any valid or invalid entries, right? That's only based off of what I've found. Now to you or to somebody else, a trend can be 200 pips on gold. And trust me, you're still gonna get even reversals for 200 pips or 250 pips. Always remember, the longer the reversal, the better, or the longer the trend, the better the reversal. So you want to find that sweet spot in between a long trend and a not so long trend, such that you get a trade that has high probability of winning, and you get a trade that also lines up with the indicator. if you're using it. If not, with the logic that I just showed you. So just go. So for me, what I did for this, but to come up with 150 pips, I just back tested for a whole day. So you guys remember when I said 2 weeks or 3 weeks ago I was having migraines, is because one day I spent like 20 hours in front of the charts, and I was just zooming out of a chart, 5-minute chart, 1-hour chart for each instrument for US 30, gold, and EU, and just finding a trend, and then I just back tested. So that's how I came up with that. Now, if it works for you, well and good, but I would also advise you guys to also backtest yourself and see what makes sense to you. So hopefully that helps in getting what you asked. See.
I have a question.
Mhm.
You know, when there is a signal for a reversal, and for example, the trade that you and I took before news on the EU,
Mhm.
so it went in profit like for 20 pips, and after now it is still in drawdown.
Mhm.
I saw that you were counting the pips to know when to start counting for the 50 pips. You are counting
Mhm.
I think it was the last time the price was above the 9 EMA. Is that
Mhm.
correct?
Yes, correct. Consistently above, yes.
So I was wondering if there is a trade like this when like there is a senior, but the trade don't go to hit like 50% in profit,
Mhm.
or it doesn't hit take profit.
Mhm.
Is it why do you need to like to wait for another 50 pips trend to consider going in?
Correct. So for that one, so that was EU, right? So when did you take this EU? Oh, you took the one I'd
Yeah,
marked up. Uh-huh.
yeah, I took it. I think it was the same time. I was looking at it this morning.
Okay, yeah, and
Um,
you did 50 pay. Okay, so for
yeah,
that one, so remember what I said is
yeah, this one, yeah.
so remember what I said is if you get taken, so it's still in drawdown, right? So that's fine. Remember what I
Yeah.
said, if you either get taken out, move to the 30-minute and move to the 1 hour, you'll get another chance to go. So if this, for you, for this trade, if we do get this buy here, so it's not within this threshold that I'd marked. So it's not even something you can scale. You can still scale in, but I don't recommend scaling in on 5-minute trades unless you're doing it with proper risk management. Now, for this trade, I would just say let it ride. So remember, even for me, when I first entered this trade with 20 pip stop loss, 20 pip TP, guess what it did? It went into drawdown. But did it hit my stop loss? No. It came back. News brought it back up. Spiked up at some point close to 90%, and that's when I set break even. So even for me, when I first entered this trade and I entered it with 20 pip TP and 20 pip stop loss, I went into drawdown about 80%, but price came back up. So if you're in this trade and you have a 50 pip TP, 50 pip stop loss, the trade is still valid. It was a valid buy. So for this one, I would say just depending on your risk management, I still think it's a valid buy. Keep in mind, I'm still waiting for a breaker, for another reversal, but price has to come somewhere all the way down here. Now, this is not good for you because you might get stopped out. Now, if you get stopped out on this trade, since we are still waiting for another one, I would enter again at the 5-minute down here. Or if you want, and wait for the 30-minute, let's see what's going on the 30-minute and the hourly. I'm pretty sure there's probably nothing because, yeah, probably 30-minute as well. But you can see on the 30-minute, if price comes back down, yes, it will be good to wait for the 30-minute because price will still be below the 9 EMA, or you can wait for the hourly. So for you personally, if you're still in this trade, just let it do what it's going to do. So hopefully here, just for your sake, I hope just price keeps going up and goes back all the way to full TP. But just let this trade ride and let it do what it's supposed to do. If you get faked out, if you get faked out or if you get stopped out, do not enter with us, or do not enter when I say, when we get a reversal, another reversal right here on the 5 minute. And in this case, I don't think we'll get a reversal on the 5 minute, because keep in mind, as much as you're not interested in buys that show up in this range, you also don't want to see price being consistently above the 9 EMA. So in this case, this trend, this threshold right here might be invalidated, because it looks like price might start reversing to the upside. So yeah, Desire, you should be good for this trade. The only thing, if you do get stopped out for this trade, wait for the 30-minute for a buy, 30-minute or 1 hour, and catch a reversal for a buy, and you'll be able to make up your money.
Yeah. I had a good risk management, so it's not a problem.
Okay.
So what I was wondering is, why did you I don't know if you heard my question, is that we didn't get a full retracement on this one, so why not getting in, like, for that signal just came out, why not getting in now? Because like the first entry, like, I took, so the trading went only for 20 pips. So
do you mean why not getting into this buy?
yeah, because like we are still in a downtrend. It may,
So the
yeah.
question is, why not get into, are you asking why not get into this buy based off of what? Based off of the reversal strategy? Or based off
best of the reversal, because like we had the first buy here that we took, but it didn't go like 50% in profit, as as the rule for this strategy.
Okay, so for this one, if okay, so for you personally, and that's why I said, if you're already in this trade, you can decide to scale in. However, for me, if I'm taking a reversal, I just let it hit TP or hit stop loss or hit 50%. Now, I'm not going to call this trade on the live session for people who did not catch this buy already, because now this buy right here does not satisfy the current trend. You know what I mean? So does not satisfy this 50 pips. But for you, since you're already in this trade, you can scale in based, so long as you have proper risk management. Yes, you can scale in because it looks like price is about to go back up. But for somebody who did not already take this first buy and they haven't taken any trade for today, this would not count as a buy, as a reversal buy for EU, if that makes sense. But for you who's already in, yes, it can count. Now for the people who have not, oh, wait. Did we miss US? No, US 30 did not go all the way down there. Give me 1 second. Yeah, but for you who's already in, you can scale in, but just use proper risk management. What is, oh, okay. I thought we missed this trade. So for the people, so for the EU, for
So it means that when the price come, for example, for this buy, when the price came above the 9 EMA, and it means that we start again looking for another reversal, so we must count 50 pips.
Now, only if we get into a trend. So remember, this trend has not been confirmed. So whatever's happened, you normally see a trend after the fact. So right now, we don't know whether this is a trend, because this candle can come all the way back down.
Okay.
Yeah. So if this threshold right here was 50 pips, we would have automatically gotten a buy signal. And that's why I say this reversal, it's what do I call it? So if for some people a reversal is, I'll just delete it. If for some people a reversal is 10 or 20 or 30 pips, this could have been a buy you could have taken. But for me, a reversal is 50 pips. So for me, this, I'm not taking this buy. It doesn't, it does not conform to the reversal strategy. This one, but this one that you and I did get in, yes, this was a valid buy based on the reversal.
Okay, thank you.
Yeah. US 30 so you can see everything is in demand zones, but right now there is nothing. So to enter any buys on all these instruments, even minus the reversal strategy, I need a high low to be created on the 5 minute. So I'm sorry, yeah, a higher low. So on US 30 on the 5-minute, I need a high low so that I can draw a trend line from this lower low to that high low. On gold, I need a high low as well to be created in order to draw a trend line. And on EU, I need a high low as well. So I don't care if price is going up, let price keep going up. So there's no entry whatsoever. So whether it's with the reversal strategy or whether it's with our normal strategies, there is no strategy for a confluence, unless, right, the only thing I can see is somebody hopping on, FOMOing or jumping in because we're in demand zones. But for me to enter any trade, remember, I always have to have a trend line, entry based off of a trend line, entry based off of a retest of 9 EMA, entry based off of a high low. And even for the 9 EMA, I normally want to have a trend line that's supporting it. So there's honestly, even for right now, as much as some of these instruments are going up, I do not see any particular trade that is valid. Yeah, that's pretty much it. Yeah, so this, also the NZD-CHF trade that I sent on Friday did hit stop loss. So I did update, so we took it on Friday. I did update that as a loss on Friday for less minus 0.5. So currently this month we're only up 0.1%. And I did tell you guys the summer is just a slow days in the markets. Yeah, so unfortunately, all this Forex minor trades have just hit stop loss, but it is what it is. Let me see if it, I think it did come back down.
Yeah, I was in that trade too. It came back. I just went out at break even.
Yeah, because this was the reversal. If we do this, we entered the sell. This is 30, should be closed right here. Yeah, so got faked out. This was the trade right here. Got faked out and price just came back down. Yeah, but that's the nature of trading, right? You get as much as you can try even to have a big stop loss or TP. Sometimes you just end up yeah. So this is the trade, ended up hitting stop loss, faking out, and then came back. Now for here, since this is the hourly, I'm pretty sure there was a sell signal up there. So since this is the hourly, I do that, and I do fast moving average.
You have two positions, no?
Yeah, but I already closed out of the other one. I'd scaled in for like just a couple of just like a small return. Yeah. Yeah, I thought there would have been a sell up here, but I guess it was invalidated. Okay, yeah, but that's it for NZD-CHF. I wouldn't be surprised if it keeps melting to the downside from here, but that's just the nature of trading. So still waiting on this. I'll set up an alert, some alerts for this one, but so right now the only trades we can get is if we get a high low. So if we get a high low on either gold, US 30 or EU, we can just draw a trend line and then get an entry, buy entry from those, because it looks like we might not get any reversals on these instruments. Gold, I think gold satisfied, right? Gold satisfied the reversal. Give me 1 second. This is the issue of looking at too many instruments. Gold. Is this the reversal chart? It should show something. It was what, 2038. So I'm looking for less 15. Yeah, gold. Yeah, if we get a buy on gold, because I remember gold satisfied the reversal. So right here, gold 2038. This was 2023. Yeah. So if we get a buy on gold, I will be taking that trade. So we just need a buy signal on gold right here. So that's the only one. So EU, we saw we are not going to get any confirmation of a reversal. US 30, same as US 30, because US 30 needs to go like at least 500 pips. Now, the other trade I can see for US30, we do have this static trend line. So this static trend line is from this high low to this lower low, and US30 is about to close above the 4-hour bullish, the hourly bullish low. So for here, as much as we don't have a high low, if we get a closure above this zone, we need the next candle to retest and close above. So this is a buy on US30 that I can see right here. And right, we also have the 4-hour bullish low here. So this is the buy for US30 that's lining up. And for this one, looks like the candles are moving heavy. So we'll do 100 pips TP and 100 pips stop loss. Yeah, that would be good. So we need this candle to break. We need a candle to break above this static trend line. And then we need another candle to retest and close above that static trend line. And at that point, that will be a buy for US30. So we need a candle closure above here. So also if you want, right, you can do what we do, the filler trade. So we have an hourly bullish high here. We have an hourly bullish low. So actually I will enter into a filler trade for gold. Remember, filler trades, you're risking 0.125% because filler trades, you want to see if price is going to go in your direction. Yeah, so there should be the first filler trade. So remember, filler trades are not only based off of the hourly bullish and the hourly and above bullish and bearish zones. And normally you want to go for what is that, double that. So you're not looking to make money. Personally, I just entered this with 100 pips TP, 100 pips stop loss. So normally what you want to do, you're not looking to make money with a filler trade. You're looking for confirmation. The reason we are doing that is because we have a, so if I go ahead and do this, and remember the risk for this trade is 0.125%. So we have an hourly bullish high here, hourly bullish low. So it's 33,235 and 33,200. So it's like a 35 pip zone, right? So you break that zone into 3. So the first trade is a filler trade just to show you, how price is reacting from that zone. The next trade is in the middle of that zone. So long position. So the middle of that zone would be maybe 223. And because, so this hourly bullish high and bullish low, it's, it's ideally a bit compressed, because what we normally do, we normally have a 3 trades and just enter at the bottom, the middle, and at the top. So we really don't have time to enter 3 trades here, because you can see this zone is too small and these candles are too big. So right now, this is the only filler trade, risk of 0.125%. What we want to see for this filler trade, so this will be the main trade somewhere above here. What we want to see for this filler trade, we don't want to see it go too much into drawdown. So where do I have that markup? So we want to see get filled in, maybe come down, play around, and then we want to see it move. Again, you're not looking to make money from a filler trade. You're just looking for confirmation. Now, if we do get this trade going up, like somewhere this way, like 50% of the position, 50% of the position, what we would be looking for is, at that point we'll have a candle that's closing above this static trend line, right? So at that point, price will be somewhere around here. Then we get that candle closure. Guess what? We then get a retest of either the hourly bullish high, which is around 33,235, or we get a retest of the 9 EMA or retest of this trend line. And then at that point, we can enter this bigger buy position. So that's what I'm waiting for. So right now I'm just in this one trade. So whether you want to use 0.12, remember, I recommend just using 0.125%. If you don't want to do that, right, that's the risk is on you. But just understand how these trades are working. Let's see, still waiting on gold. Nothing as of yet.
Okay.
Mhm.
Yeah, so mm, yeah, so the news candle up, and then when it went up, then
Wait,
then
I can't hear you clearly.
so the news candle,
Uh-huh.
yeah, it went up, and then
Mhm.
when you waited for
Wait, for what?
uh,
For what instrument?
gold,
Mhm.
yeah, so then when it like went came back down, is that reversal as well?
No. So that just tells you manipulation. That's it. Just tells you manipulation. And always look at wicks. Wicks tell you a story. So if you have a long wick to the top, it just tells you there's a bunch of sellers up here, which is why this sell was a valid sell. But yeah, so when you see if the buy was to continue, you would have, so what you want to, and that's why you always want to wait for the first 5-minute news candle. So what you would have wanted to see if buys were to take charge was a strong bullish candle. So let's say this was FOMC or NFP, and using my trading strategy for news, you're always looking for a strong bullish or bearish candle, bullish or bearish 5-minute news candle. So this is not even a trade I would have taken because this candle was not a strong bullish candle. In any case, this candle is telling me that right here around 2040, there's a bunch of sellers sitting here. So this is not reversal. It was just manipulation to manipulate the people who are trying to catch this sell, stop them out, and also trap buyers. So remember, right, if you're a market maker, the best thing you can do is to trap people in both directions, right? I think we are lucky that price can either go up or down. What if we had a third option? But right, this right here, they know there are people who are trying to sell based off of this, and maybe the stop loss, right? If you're selling here, even let's not even think of our own strategies, just regular retail traders, and let's say they entered a sell here. Most of them put their stop loss above the previous high. So their stop loss would be around here. So the market makers know that news comes out, they fake these sellers out and then drop price back down. Okay, on the other hand, they know that there's buyers up here. So they fake this move up here, and then buyers can, some buyers will be like, oh, price is gonna go up. This is a bullish candle. So let me try and enter into a buy. What happens when you enter into a buy there? They give you a little bit of money. Maybe you put your stop loss below the previous swing low. And guess what? You end up getting stopped. I don't know what TP and stop loss they would have used, but whatnot. Easily trap sellers here and trap buyers here, and then the market makers just take the money by themselves. Yeah, so that's why news trading, I would say to be comfortable trading news, for me, it took about 6 months or so, even a year. So definitely. And for news journal, just don't rely on your memory and try to remember or try to see where news went or where price went last time. Always journal. So the reason I can easily trade news without even sweating is because I journaled what happens on NFP, what has happened more times than not on NFP, on FOMC, on CPI. I have that all written down, and I can easily just trade in those directions. So yeah, always journal. You're not going to be good at trading, I wish you can be, but more than likely, unless now you spend time backtesting, like sit on your computer, backtest the last yearly or the last 12 FOMCs, the last 12 CPIs, yeah, you'll get a head start. But if you don't have time to do that, right, just forward test each and every CPI, go ahead, analyze the pattern that happened, the first 5-minute candles, what pattern happened, and then you'll be good at it in like a year, hopefully 6 months or sooner.
Yeah. So this
There goes your
mani-
30.
was it manipulation? So the manipulation that you said that happened. So it broke all the zones to the bottom. All the demand zones. How come it broke it? Like why did it just break and just go?
Give me 1 second. If this candle closes, this will be the buy, because this next candle, you can see there was a gap up. If I turn this off, this little candle, spinning top or whatever indecisive candle, closed above the trend line. No, I'm sorry, my bad. It did not close. It actually closed below. Oh, okay. So this candle will be the first one to close above this trend line. So the filler trade should be in profit. Whether or not you chose to use the bigger lot size, that's the smaller lot size. But so right now we want this candle to close And then we want the next candle to close above this trend line. So hopefully retest and close above, but either way, we're in demand zones. We are in an hourly bullish order block. So we'll wait, hopefully get a trade after the next candle. Go ahead. What was your follow-up question?
Okay, so after the news candle, is it so? What's it called? Yeah. So any type of red folder news apart from FOMC, so FOMC, NFP, CPI, like you said, it has its own pattern, isn't it? Yeah.
Mhm.
So respective of that, just like red folder news, like USD, like normal, like today, for example,
Mhm.
that it does this what's it called? Yeah, it would just break the zone, like how it just did. How
Mhm.
would you? How can you deal with that?
So the other way, the first thing, so before I got good at technicals, or before I developed my strategies, I always thought about, right? So news is fundamentals. So unemployment claims. So how I started, I would go into each so I understood what each means. So the first part, if you're not already good at it, do you know what CPI means? So CPI is the measure of inflation. Inflation is not, well, it should tell you in here, but I need to remember inflation because, well, I know what it is, but I need to remember the effect it has on some of these instruments. Now, but unemployment, so for example, I'll start with unemployment. So right here, you have unemployment claims. So the higher the unemployment claims, that's not good for the markets. That means a lot of people are applying for unemployment. A lot of people, or more people, don't have jobs. So if the current number goes up from the previous number, you normally expect a drop in like stocks, and because ideally a high rate of unemployment just means that or primarily fundamentally means that the economy is not doing as well. So then they tell you, right, the number of individuals who filed for unemployment and whatnot. So actual less than forecast is good for currency. So this means that if this was less than the forecast, I believe was 245, right? Forecast was 245, yes. So if actual was less than this, stuff like EU would go down, and the US dollar would rise, right? But what happened today? What today during news, that did happen, right? No, actual would be good for currency. So this right here, what happened, they manipulated price, pushed price up, but based on fundamentals, the US dollar gained in value. So that's why you had this downtrend, right? So that's how I started understanding news. So I understood, how does these numbers here affect what I'm trading? So if I'm trading EU and I have oh wait, I need to relook at this. Wait, actual less than forecast is good for currency. So it's actually the opposite. So today actual was greater than forecast. So the
That US
forecast
30
was
trade valid now or no?
so we need this so this is the candle that closed above. So we need this candle to come back down, retest the trend line, and go up. So remember, when the candle that breaks a trend line, you always want to wait for a retest of the trend line. So either retest of the trend line, or retest of the 9 EMA, or retest of a high low. So right now, this is the only trend line we have. So this right here is the candle that's going to give us the entry. So at this point, right, this candle is so far up. So if this candle closes, yes, this is a valid entry. However, US 30 has pushed so far up. If you were to take this trade, you would need your stop loss to be below this trend line. However, I'm waiting for this trade around the hourly bullish low, which is around 33 to 35. So this is the way this candle closes is what's going to tell you. So you can enter on this candle closure, but I do not recommend that. Yeah. So my entry for this trade, we need to, so always remember, right? The candle that breaks a static trend line. So this candle did not break the static trend line. This indecisive candle right here. This is the candle that broke and closed above. So after a candle breaks and closes above a static or above or below a static trend line, you want the next candle to retest and close above or below based on your direction. So at this point, the buy would actually be the closure of this candle, but this candle is too far up. It picked up, and this is why I was talking about this filler trade. It picked up liquidity from this bullish order block. Yeah, so hopefully you guys make money with the filler trade. It's just a 0.125%. At this point, your trade should be at break even. So for the filler trade, remember, for me, the filler trade, I just let it hit stop loss or TP because 0.125 is not really going to make or break my day. But based off of our strategy, either secure half. So at this point, you should be securing half and leaving a runner. So for this big trade right here, just wait for it around 33 to 35 area. That point should be around the 9 EMA, and hopefully this should coincide with the hourly bullish high that's around here. So right now, unless you want to, if this candle closes, it's still a valid buy. However, be cautious because we still expect price to retrace. So if you're going to take this trade, so for example, let me show you how to take it. Use 150 pip, go 150 pip TP. Let's see how far that is. Yeah, use 150 pips TP, 150 pips stop loss because you want to survive this retracement right there. So I'll enter this trade to use a 0.5% risk for this trade. Let's see, go for this one, US 30 by 150 pips TP, 50 pips stop loss. And there it goes. So EU, there's something I'm looking for on EU and US 30. I'm sorry, for EU, and I'm not getting it. Just a second. Euro USD. Still not valid. Odd USD. Oh, gold. We still don't have that reversal, so that's fine. Odd USD. Okay. Okay. Yeah. So, and we also we are coming into this daily bullish low, so hopefully it picks up liquidity. I still do expect some retracement, so this is the reason I said to well, the trade, it does make sense. It's not like FOMO or anything, but to mitigate from that retracement, that's the reason I said to use 150 pip TP, 150 pip stop loss. For gold, now, if this trade does come back here and give me the initial entry, I will size in personally with a bigger position and close out and see, possibly go for 20 or so pips, close out the size in and close half of this position as well. But I'll let you guys know. Yeah, but the reason I extended this to 150 pips, so I want you guys to see when we break static trend line, you almost always expect a retracement to an area around there. So let me delete this right here. Delete that, and also let me delete this markup for now, so we don't have too many arrows. Yeah, so this gold, I'm really waiting for this reversal signal on gold, so hopefully we get that. Yeah. Oh God, it's already 11. Yeah, time goes by so fast. So it's past. We normally stop trading at 11 or stop the live stream at about 11. So I'll leave these trades as is. But I told you guys, if price retraces around this static trend line on the 5-minute, I will size in, and then I will look to close the size in and maybe close half of this position. But other than that, I will keep holding this particular trade right here. Does anybody else have any final questions?
Okay, then one more thing. When you said, you know, what's it called? Yeah, the 5 minute and the 15 for golden.
Wait, could you come again? I can't hear you.
With the the 5 minute and the 15
Uh-huh.
time frame. So when the golden on death cross form, you look at it on the 5 minute first, and then
Wait,
when you look,
you're still breaking up.
yeah. So when you look for the golden cross and death cross, you
Mhm.
look for it on the 5 minute.
Yeah,
First, and then-
I don't trade any other time frame. I always trade the 5 minute, but it should be the same. It should be the same analogy. So everything that I talk about, whether it's on the 1 minute, whether it's on the 15, whether it's on the hourly, same thing. But for me, it's just a preference to trade on one time frame.
So what's it called? Yeah. So when it forms, does that mean like not straight away, but just you're gonna use your confidence? But I'm saying when
You-
it forms,
Uh-huh.
when it forms, do you just is that a valid trade? Would you say?
Yeah, more times than not. So remember, for golden crosses or death crosses, I'll always almost, if I'm in front of the charts, I'll almost always, so I can automatically see a golden cross forming on US 30. However, maybe not now, maybe in the next hour or so. So when I see something like that happening, I'll try and get an earlier entry. So an earlier entry, you can easily use the reversal strategy, use the order blocks, use the supply and demand zones.
Mm.
If I meet that the golden or death cross has already formed, I'll wait for I'll check, has there been a retest of the 9 EMA or 200 EMA? If there has, then that's it. I've already missed that. I'm not going to look to re-enter it. If a retest has not happened, then I'll wait for that retest and I'll enter it. It's just that.
But the thing is this: when it forms, the thing is sometimes what it does is it goes in waves, and then eventually it goes all the way up. Have you realized that it does that?
Yeah, so
it
when
has
it
been
forms, so when a golden or death cross forms, you normally have a spike in liquidity. So it can either go away from you or give you an entry, right? So it's either one of those two options. So for me, if a trade goes away from me, I don't care. That's just trading, right? I'm not gonna bother myself with a trade that I could have entered. So you want to just, so long as you have your confluences, you'll never be in doubt of a trade. Right? Just keep it simple. Just know what are the confluences for a death cross, for a golden cross. If I have an opportunity to enter a golden cross before it forms and the trade is valid, go ahead and enter. If you do not enter it. If a golden cross has already happened and you already have a retest of the 9 EMA or 200 EMA, don't try to re-enter it.
Yeah.
If you haven't gotten a retest, then look for that retest and enter it.
All right. So yeah. So straight when it forms, you would wait for. Let's just say you would wait for it to reach a 9 first, and then you'd enter, right?
Yes, but remember we have a lot of confluences, right? So are you talking about just, if I'm just trading the golden cross by itself? Yes, right? But of course you want to look at where is price bearish, is price bullish? So you almost always want to find other confluence. But if I'm just trading the golden cross by, if I don't have anything else around it, yes, I'll just wait for a retest and enter.
Okay, so if it's in let's just say the supply zone, you're in a bearish zone, and the golden cross form, you wouldn't.
No, I
take it.
wouldn't. Yeah, no, I wouldn't take it because it doesn't make sense. It doesn't make sense to buy when there's those supply zones. And keep in mind, right? I trade on the 5 minutes. So if I see we had the same thing I think yesterday. So if there's a golden cross on the 5 minute and I'm in supply zones, more than likely those supply zones are like 4 hours, 1 hour, 30 minutes. So remember, here's the other thing: high time frame zones always override low time frame zones. So as much as you might have a golden cross on the 5 minute, if you have supply zones on the high time frame, then the golden cross you shouldn't enter that golden cross.
And then the other thing is one more thing. What's it called? Yeah. So you said you use the 5 minute, but like some people they say, the 15-minute time frame. What you should do is, for your TP, you should look to the left of the chart and look to the not the highest point, but to the point where price came from, and then put your TP below that. Now, have you heard of that?
Yeah, but I mean, that's their own way of trading, right? That's their strategy. So for me, my strategy works for me. The best I can do is to improve my strategy. But yeah, I know people who do that, but if it works for them, well and good. right now, do I want to do that? No, because my strategy already works. So if something is not broken and it's working for you, at most try to improve it, or just don't try to change it. Because the
Okay.
issue is we're already trading 3 instruments. So if I were to move from chart to chart, from 5-minute to 15-minute, either would make us miss trades or would just be confusing. So at the very least, right now I have the 5-minute on the left, the 1 hour on my right. And sure, I can add 5 minutes, 1 hour and 15-minute. But I told you guys yesterday, trading is simple. You like, for me, I don't even need this 1 hour on my right right now. Just make trading simple. Start with one time frame, master how price moves on that one time frame. And if you do, I know people who are so good at trading on the 1 minute time frame. I used to do that, but it never worked for
Okay.
me. So yeah, whatever other people are doing, I would only consider it if I don't have a consistent win rate, but my win rate is about 80%. So to me, that's good enough. I don't want to really change that by adding another time frame.
That's the year. So this the last one here. So the hourly. So when you look at the hourly, you said the hourly and the 4 hour override the overall.
Mhm.
What do you mean by that?
So this demand zones right here. So remember, I marked this one's daily, starting from the monthly down to the 15-minute. So if we had a golden cross right here, and I had this supply zone right here, so I haven't marked up like a 4-hour supply zone is color green, and I haven't color coded that, because if I were to do that, the chart would just have all the colors of the table. So I've just used red for all supply zones, whether it's on the 15-minute, whether it's on the 4-hour. So when a golden cross is here on the 5-minute and I have this supply zone right here, I don't know what supply zone that is. It might be the 4-hour, it might be the 15-minute, but at the very least, I know that I don't have any markups, any supply and demand markups for the 5-minute. I do not go that low for supply and demand markups because I'm already trading the 5-minute chart. So at the very least, I have a 15-minute. So at any given point, if you ever see red and green zones on my chart, just know they're 15-minute and above. So that's what I mean. All those zones will always override the death cross or golden cross on the 5-minute, if that makes sense. So all these green areas and red areas, they're 15-minute and above. We are trading on the 5-minute time frame. That is to mean any entry that we get on the 5-minute time frame has to line up in the same direction as this green zones and as these red zones. So I don't want to be like, right now I'm comfortable with this buy because we are around green zones and we are also around daily bullish lows, hourly bullish lows. But if we had this buy right here and we had nothing but supply zones right here, to be honest, it wouldn't be a good trade. So that's what I mean by overall high time frame zones overlap the 5-minute. Does that make sense?
Yeah, bro, that makes sense.
All right.
So you said the 5-minute and the 15-minute have to go in line.
No.
Or with the 1 hour.
No. Whatever. Okay,
Yeah.
let me put it this way. Whatever it is you're trading, it doesn't have to be the 5-minute. Whatever chart you're trading, you want it to align with all other time frames. So if you're entering a buy on the 1-minute, you want the zones around the 1-minute entry to line up with all other time frames.
All of them, yeah.
Right?
All right, yeah, that makes sense.
So
Yeah,
it doesn't have to be 100%, but you want right. So right now we're in a buy, but we are in nothing but we have an hourly bullish low, 30-minute bullish low, daily. So we have nothing but bullish zones right here. Now we could have had a 30-minute bearish zone, but is that going to stop us from entering this trade? No, because we have an hourly bullish low, hourly bullish high, 30-minute bullish low, 30-minute bullish high. So if we did have a 30-minute bearish and high and low here, it would have been overridden by all these bullish zones. So if you're entering a buy, make sure that the zones around that buy, it doesn't matter what time frame you're in, make sure the zones or the markups around that buy are mostly bullish or are mostly demand zones. If you're entering any sell, make sure the zones around that zone are mostly bearish zones and are mostly supply zones.
Yeah, that makes sense. Yeah.
Yeah.
All right, bro.
All right. Other than that, unless anybody else has any questions, I will see you guys later. I'm still gonna hold on to this trade. I do expect a spike in liquidity. You can see we have a daily bull, especially if we close above this daily bullish low. I do expect price to jump up. But other than that, I will see you guys tomorrow. All right, bye.